The last 6 months in real estate have been very difficult for investors. Inventory has been shooting up due to interest rates rising. That's caused the buyer demand to drop significantly. And in turn, prices have dropped about 10% here in Las Vegas. And because I have so many house flips going on, I'm going to experience quite a few losses on those flips, probably to the tune of over $1 million in bad deals. And I'm actually thankful that that is going to be the loss, because it could have been significantly worse if we didn't make the pivot to trying to focus on wholesale for the last 6 months. Now, obviously it sucks losing that much money because it causes cash flow issues, and it's money that you were probably counting on to make as profit that you're now having to pay out of pocket instead. And so for me to plug that loss, I'm gonna end up selling some of my rental properties. We're obviously still focused on doing wholesaling and creative finance, and I'll rely on some of my other businesses that have been doing well to help offset it. But even though the last 6 months have sucked, there is good news. The real estate market is finally turning. So let me explain. Since 2018, I have been tracking the monthly inventory in Las Vegas every single day. And on our Wealthy Investor Coaching calls, I show our students this sheet so that they can get an idea of what's happening on a daily basis in the market. You see, in real estate, things are very slow moving. It's not like the stock market or the crypto market where you can just see it every single day based on what happened. If there's a shift happening in real estate, you may not see it until 2, 3, 4 months down the road. And there's a massive shift happening right now that I'm gonna show you here later on in the video. So there are basically 3 things that I'm tracking in this sheet. The first are all of the active homes on the market. This would be everything that's listed for sale that's not currently under contract. The second thing is going to be the last 30 days of sale. This is simply how many homes have sold in the last 30 days. The next one's going to be the contingent homes. This is simply how many properties are in escrow to sell. And with these 3 data points, you're gonna have a really good idea of where the market is and how it is shifting. I use these 3 data points to give myself 3 different numbers that I track. The first is going to be total homes. With total homes, you can see how many properties are either active or contingent. This is important to know because it shows you how many people are actually willing to sell their home in the market. If there's less people willing to sell homes, then that's a good sign if you want to sell your home because you have less competition. The next stat I tracked is what I call my sell rate, or the months of inventory. This would simply be taking all the active homes divided by the last 30 days sold. So if there are 6,000 active homes and there's been 2,000 homes that have been sold in the last 30 days, that means you have a 3-month sale rate. And 3 months traditionally has been a very neutral market. Anything under 3 months is a seller's market. Anything over 3 months is typically a buyer's market. So you can guess, since the pandemic, we've been in an extreme seller's market with sometimes less than 1 month of inventory. But in the last 6 months, we've had anywhere from 4 to 5 months of inventory here in Las Vegas. But probably the most important thing that I watch is the contingent rate. This is simply the number of active homes divided by how many homes are in contingent status. The reason this stat is so important is because it is a precursor to what the market is going to do and show. If more homes are starting to go under contract and less are available, that means that there's going to be less inventory once those sell. And so they're gonna take time to sell. The typical property might take 30 days in escrow, but once those 30 days hit, then you're gonna start seeing the data and the media tell you that, whoa, the market is starting to heat up. There have been more sales, there's less inventory. But it all starts with watching how many properties are going into contract. So that being said, these are the main metrics that I have been tracking since 2018 on a daily basis so that I can have a pulse on what's happening in my local market. And if you're in real estate investing, especially house flipping or wholesaling, you should be tracking this too. It's super easy. All you gotta do is just create a spreadsheet and go on your MLS every single day and check how many homes are active, how many have sold in the last 30 days, and how many are under contract. Then you can create formulas that automatically calculate the total homes, the sale rate, and the contingent rate. I simply have a VA who does this every single morning. But anyways, let's talk about what I'm actually seeing with this data and why it gets me excited. So we first saw the market start to shift in April of 2022. At the time here in Vegas, we had less than a month of inventory, and so the market was red hot. But that was the first month we started to see the contingent rate start to rise. If the contingent rate rises, that's not good for us as flippers or investors, because that means inventory is gonna go up. Now, back in April, even though it was going up and turning for the first time, we were still in such a red hot market. It wasn't a big deal, and it was kinda to be expected. The market could not continue at that blistering pace forever, and so we expected it to normalize at some point. Well, as May and June came along, it was definitely normalizing and getting back to a neutral market, but the problem was we didn't know when the bleeding would stop. Nobody knew when the Federal Reserve was going to stop their rate hikes, and in turn, they ended up raising rates faster than they ever have before in history. And so we saw the contingent rate go from 0.5 in April all the way to 10x that and go to 5. Which obviously is why real estate investors have been feeling the pain on properties that they have bought during this time and they were expecting to sell. The demand simply just stopped with all of the interest rate increases. But for the first time since April, December started to show the contingent rate dropping. So we had 8 months of it rising or stalling out, but December was that first month where it finally started dropping. And I told all of our students at Wealthy Investor to just watch this, because if it continues to drop, we're going to start seeing a lot more demand and things are going to pick up significantly. Well, lucky for us as investors, that contingent rate has continued to drop in January and it's showing no signs of stopping. And I'm seeing this subjectively as well. Our house flips are getting way more showings, we're getting way more offers, we're getting way more calls. It is a totally different market right now than the last 6 months. In fact, I would argue that in January alone, we've gotten more offers than we did in the last 3 to 6 months. It's been that big of a difference. And I think there's a few reasons for this. Number one, most people probably assume that interest rates are going to remain where they are. They're not really going to go up too much more. Inflation is coming down, but we're not going to be dropping rates. I also think that buyers who tried to purchase in the last year or two who could not get a home are now coming back to the mix. They might have been sitting on the sidelines thinking that the market was going to crash and prices were going to drop significantly, and that just has not happened. As I've said before, here in Vegas, they've dropped about 10%, and now demand is starting to pick up. I'm not saying that prices are going to go up, but I'm definitely saying that prices aren't going down with this kind of demand. Also, if you look at the data, there are significantly less homes for sale. If you look back in October and November, we had 8,500 active listings. Here in January, we now have only 6,300. And even though there are way less active listings, we've got the same amount going into contract now. And what that tells me is buyers have realized that prices basically are what they are, and they're gonna have to buy a home whether they like it or not. And it tells me that sellers simply just don't wanna sell. If you've bought at market value in the last 18 months, you are either going to be underwater on your home or you're gonna break even selling your home. And neither of those scenarios sound good to a seller, but the thing is, they have a great interest rate on their home, most likely. Over 50% of the homes in America have a 3% interest rate or less. And so if you're gonna go lose money or break even on your home and you still gotta go find a place to live, why would you ever sell your home? You would only sell your home if you were forced due to relocation or something like that. And so basically what you're seeing is sellers taking their home off the market who potentially wanted to sell earlier, and now it no longer makes sense. And what I believe is in the next couple of months, you're gonna see the headlines in real estate start to change dramatically, where they're gonna be talking about the market heating up. And what that means is if you're flipping houses and you're willing to take a chance, right now would be the best time to buy a home. The media and everyone else still hasn't really caught on to the fact that things are shifting. And so there's still a ton of great deals out there for the taking. And by the time that the house gets fixed up and listed, you're in springtime, where I believe the media is gonna have caught on by then. Plus, the springtime traditionally for most places is a great time to sell real estate, and that's when the market does start heating up seasonally. If I'm a betting man, that's what I think is going to happen, but it is still a risky time to flip houses. Obviously, the Fed could do something that makes things shift. Maybe these numbers start to go back the opposite direction for some reason, but based on what I have seen for the last month, I'm very confident in what is going to happen here in Q2. So if you haven't got into the house flipping or wholesaling game, I actually think now is an amazing time, because you kind of missed out on the last 6 months that have been tough, and you're walking into a great situation. And if you want to learn more about how you can get started in real estate investing today, you can go to wealthyinvestor.com and have a free call with my team. We've got coaching programs for people who are just getting started and people who are trying to scale their business to the next level. As for me, if you're wondering what my strategy is, like I said in the beginning, I'm still focused on selling off some of the bad deals that I have. I'm focused on offsetting those losses by selling some rentals, doing some more wholesaling, more creative finance, and continuing to run my other businesses effectively. I'm gonna be watching the inventory levels every single day, and my strategy will adjust as things become even more clear. I would anticipate that we're gonna start buying flips heavily again here very soon. And if the government ever decides they wanna lower rates this year, then we're gonna be in really good shape. But anyways, I hope you enjoyed this video. I think you're gonna like this next one even more on real estate investing.